learned to an election. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel less a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it. Working to the
All right, ladies and gentlemen, I got your watch list coming in on March 5th, 2020, and the stock market has diverged. We had another single point record day on the upside. However, not everything followed up with it. This is still extreme volatility that we're in. This is the most volatility that we've even seen since 2011 on a day-to-day basis. That was the European financial crisis. This is even resembling upwards moves of Brexit in 2016. But as certain assets move in one direction, other assets move in another direction, and it creates this divergence. So I'm going to talk about that. It's related to the one and only stock I'm probably going to be playing here. However, I still got 3 other plays for you that I want to talk about. Amongst other things, today was crazy. A lot of traders did base it upon the Bernie Sanders, Joe Biden theory. This is when the results from Super Tuesday came in and the market started to rip off that. So we discussed the impact of Bernie Sanders a few days ago. Even the president talked about it, but a lot of people kind of wrote it off considering what was happening. However, this was one explanation a lot of people gave today, and then we have other stuff to look at as well. But you even saw one of the best days in healthcare all across the board of over 10%. It was one of the biggest moves since 2008. So today was wild. There's a lot to talk about, and there's a lot we need to look forward to, and even how we're going to play it. It's still, the market is only going to get a lot more volatile from here, I think, and it's going to throw a lot of people off, and I hope you guys are ready for this. So I'm going to go over that. Got the keys for you, some plays. We'll recap what we did today. We made a few other plays, but a lot of it was what we are holding and how we plan to move forward, and there's also some key events to look for. So you guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. All we ask is that you're positive and respectful. YouTube.com/thestockmarket. If you need the news, it's there. You could watch the plays live. It's there. You need someone to talk to. We love you, baby. It's all there. So hopefully we see you there in the morning. And do not forget the most important thing you need to do. Post your watch list below. Let us know what you're looking at. You got any plays, comments, remixes? Did you play the bounce? Are you playing the short side? Are you in the TLT? Let us know. Source that information. We go over these in the morning. Okay. I'm sorry. The volatility gets me excited. You guys know how I am. But right off the bat, as far as the keys, there's a big move between value, momentum, and tech that we need to watch for. And it kind of has to do with how the market is moving. But it's kind of making me leave on the table because pretty much the only stock that I want to buy is TLT. And we're playing the option on it, not necessarily the stock. A lot of people were confused on that. So I will go over that. However, this is a key to watch because we saw a big move in the markets, but you saw different industries. So again, watch some of the momentum plays, watch value. I'm looking at HD and McDonald's. This is a very big honorable mention of another company I want to watch, especially with the options. We even have calls that came back to life, but I really, really like this, and that's the first thing to move. However, as far as this divergence, I'm going to do TLT, and this is the main thesis that I'm rocking with here for the next few weeks because the biggest thing we need to look forward is going to be the Fed and the next Fed meeting. We talked about this. The market is pricing in a 0.5 point more, and that is in 1 week and 6 days. That is wild. However, you had James Bullard today, even in the mix of everything going up. He's one of the Fed chairs. He usually dissents on stuff, but he said that they wanted to take out an insurance for what was happening. So I think it's interesting, but he said they could meet at any time, but the markets could either get disappointed there or the next move is going to happen from there. I think around there is where we're going to finalize direction or change course, pretty much unless acted upon by equal or opposite force, which would be other news, in this case, what's happening with the virus, or if we get any updates on the supply chain, anything of that nature. But this is the most important thing. Now, here is TLT and the SPY. So you guys kind of see at one point they were moving together, and then towards the end of the day, as we went higher, they kind of diverged. This is something I want to talk about because this was the divergence. A lot of things went up. We saw different moves with currency and oil. However, take a look here. This is TLT overlaid with the SPY. And actually, before I even show you that, to give you a better visual of it, here is the 10-year bond. This is what I'm talking about. So this was the first time we cut rates. This was the first time we played TLT. Bond rates hit another low. This is the 10-year again. It started to drop, and this is kind of what the markets look like. It bounced a little bit, it dropped, and then eventually it recovered through November, October, and then it you see it bounce from the lows that, it was in the gutter there, but then it eventually held up and recover, and then we saw a divergence coming from January till now. So why am I bringing this up? Because pretty much you are seeing now more of a divergence created between the S&P and whatnot, because the S&P is still higher than, up here, and this is what I'm going to say. Here's TLT. You can see what I'm talking about. There's that July, what happened. You see TLT in the orange and purple. It starts to run up. The market goes down. Then the market comes back up, comes down, and you see the oscillation between TLT. But then what happens eventually, the market starts coming up. TLT goes a little bit below that, but then TLT starts following the S&P. But then as the S&P starts going past a certain point, it's not necessarily that bond yields kept going up and TLT would drop. That's how TLT works. It is the inverse of what happens with the bonds. Instead, it based around a level, and then as we got into here, TLT and the bonds started to run up. We got a little bit of volatility. Then the market still kept going up after the Wuhan zone, but it based and stayed at another level, and now we see this. But essentially now you're seeing how TLT is still staying firmly up there, but now you're seeing a bigger bounce. So this has been a divergence, believe it or not. It's not too big, but this is what I'm going to watch pretty much coming into the Fed meeting, and this could even give you an idea how TLT is. However, this is telling us something about the market moves that we're seeing, how people are treating bonds, are people going in bonds, how people are going out of bonds, and if we keep moving up at these levels, again, there's going to be everything from short squeezes all the way down to rotations, but that is going to have to do with many, many factors, both the news as well as just the underlying fundamentals, technicals, and just trading activity of the market. So that's how I'm moving, but the main play I'm going to be doing here is riding and playing TLT throughout this, because again, I said it yesterday, this is going to be a 2 to 4 week event, 2 to even 6 months event with what's happening with the Fed in this emergency cut we saw yesterday. And even historically, remember, there's only been 9 cuts in history, and on average, you pretty much see a small gain in the short term, and then in the 6-month time frame, it kind of goes down, or they're 1 month later and then 6 months. But usually by the end, on average, you'll fall anywhere between 6 and 9% down on the year. Now, there was cases where after emergency rate cut, the markets ended up 30% on the year, and that was in 1998. So what I'm saying, we're lucky that we have the Fed, because that's going to give us kind of an inflection zone timing-wise, but it's observing the immediate reaction now from this rate cut, what's going to happen in the first month, and then this next 6-month time frame, and then how it's going to push us to the end of the year, because we're already 3 months in, 6 months later, we're kind of either going to reflect what happened here in the beginning, or we might change course, who knows. But that being said, I'm going to be watching value and momentum. If I do get tempted to play anything, or I spot opportunities with the option chain, otherwise I am building my position around TLT. That is the main thing I'm going to be doing, and there was something interesting that happened with that today. So beyond that though, watch any broader economic data. We talked about this on stream today. I think some trade data is going to take more weight. We even had PMIs today in the US. They were better than expected, which was good, and I think it's going to take some time to get some other data. However, the negative part was we saw some of the historically, I had to go back one day, the most historically worst China PMI ever on record. So this is how it looks. So again, that's another divergence with stuff, but I'm thinking if we start getting broader economic data this bad, it's going to take time. Again, all of this stuff we're seeing is slow absorbed news. So give it some time. What it's doing to contracts is going to be interesting. However, going to keep my eye on the broader economic data. I'm going to give myself time. So even setting up plays, I'm making sure I have more than a few months, and I'm scaling in. I'm keeping a lot of money on the side ready to average down, and I'm not opening up a position really unless I'm prepared to lose, because you're losing on both sides. Even that Bank of America straddle we did yesterday, we were up 60% on both sides. Both sides today went negative, even though we had this 1,100-point rip. Even the calls ended up negative and the puts ended up negative. So this is a phenomenon we've been watching and that we've seen lately. So keep your eye for that. I'll show you here with the TLT, but I mean, that's pretty much it. So let us get into the plays. I'll start with the plays that we did, and then I will go over the broader strategy here with TLT. But in the morning, I kept it small, and like I'm saying, I'm trying to build a position around TLT, and I'll show you guys the ones we're holding. Again, we covered it on the watch list, but I still wanted to get some exposure. I got tempted. It was hard to see today. I think now I know which companies to play if I get tempted, and I think that's going to be the McDonald's and Home Depot, so we're going to be looking at those. I don't have a specific play yet, but where they're at, I believe, is creating a unique and special opportunity. But the first trade that I made today, we got Procter Gamble. I grabbed a put for May. I grabbed the $90 put, and I paid 68 cents. We're down like 20% on it. I mean, not really that bad. And even if you look at the call side, if you went and spent that like $60 on the call, it'd be worth like 110 now. You would have made 86%, and then you would have lost 20% if you got the same put. So what I'm keeping in mind is that to only make 8% 86% on an option that when the stock goes up 5%, I mean, you got to put it in a perspective. It's not that good. Even if we look at the weeklies, you would have saw a lot better returns. You're talking 600-700%. And this is something I might look towards tomorrow if we want to put down a small budget aside to play some of these other plays. Because now if the market makes a big enough underlying move, however, a lot of the risk has been turning me off in terms of the time decay with everything that we're seeing. But that was the first play we did. And then next I did Starbucks. And again, we went through May. I got a little bit bigger of a position, but I got the $55 puts, and we got these at 50 cents. And I mean, again, just take a look. Even though the stock market went up 1,100 points, what happened to the puts? These things barely went down 5%, 12% on some. You know, you didn't really see too big of a drop, even with the ones that had premium. So it's telling you something. However, now this is why I've been staying away from some of the short terms, because the ones with March 20th, all that, those really got killed, but they still held up value. If you're on the weeklies, you got smacked. However, if we did go to the upside on the weeklies, they still didn't produce too big of a return, surprisingly. They had higher premiums, and you pretty much lost both sides of Starbucks, which, again, this is a phenomenon. Consider this is the second biggest day, but you're losing or barely making money on both sides. It really depended on the play. However, you're seeing how it's really a mixed bag across the board. But that was the second play. I'm still holding those. And again, all of these contracts, I got time on them. I plan to hold these for at least the next month, or at least till the Fed meeting. That's when I'm going to try to make my other move. And then finally, we played a Zoom play. They had earnings. And why I got that one, in all of these plays, I put, $60 on the first play, and then $150 on the 3 contracts on those Starbucks, and then I put $30 on this play. But we got an April, so not May. I wanted to play earnings. However, the March 20th, I showed this on stream, the March 20th puts had a lot more premium, or they were a lot cheaper, but they were so far the money, you're paying a lot more for a lot less. So what I decided to do, I went for the April contracts. I got these $60 calls at 32 cents. And why? Because Zoom went up a lot. I wanted to just play. I said, well, it's a double whammy. We could just get an overall put if things start to come down. Zoom is a momentum stock. It could drop a lot. And they've went up 15% in the last week and a half during this whole Corona mess. So I was like, if people were underestimating, we get a cheap play. But I wanted to make sure I got time, because being further out the money, there's a reason why the far at the money's on March 20th didn't have premium, but the Aprils did, because in 68 days, a lot more could happen than in 2 weeks. So you're pretty much paying for time. So it's a lot less probable that the stock will go 50%. One, in general, that's a difficult task, because these are like 50. This is a 50% out the money put. So again, low probability, really, really far out there. That's why I only got one and I only wanted one. However, there's less value, and it's way even less likely for that to happen on March 2nd than April 17th. So depending on what the market does and all these external factors, it was better to get time. You still got to play earnings if there was a negative surprise, and now we still have a pretty crappy quality put, but if anything does go bad, you will be able to profit off that. So there is that, and now the next part has to do with these TLTs. So I'm holding 3 different sets. I have the March 20th, and I said out of all the TLTs, these are my least favorite. So we bought these yesterday at 40 cents. They shot up to like $1.20. They went great, and even today they were holding up. They held up their value, but when TLT finally capitulated, we dropped. So now we're down on them about 20-30%. And someone asked, why, if I don't like them, why am I still holding them? Because you'll see here, I'm tiered. I have it where I have TLTs for March, April, May, and June. And why I did that is because the ones that are March 2nd, just like I just showed you with some of those weeklies, if you get closer to the money and there is a big move, you're positioned better to profit, way better than the ones with time that might move a little slower. So I'm taking more risk. That's why I don't like them. They're more risky. However, they offer me a higher reward. So now I'm still spaced out with the majority of my position towards the back end. So I'm risking a smaller amount up front on the shorter, more riskier end. So if things do good, I could profit and double dip and get good profits in the short term and still profit off the longer terms. However, if things go bad, I could lose on these, but I'll still have other positions that'll be better value. Or even if I lose on those positions and they go down, I will be able to build out my position and get something closer to the money. So that's why I'm getting time. I'm giving myself time, and I have to be patient with it, but I'm trying to get my hand in the cookie jar at all levels. So I'm still holding this one, and that should give you an idea. I like it coming into the Fed meeting. This one I want to hold till after the Fed meeting, but being March 2nd, I might, if it does go up prior, a few days before that, I will get rid of this. However, the Aprils and the Junes and Mays, I'm going to hold. The April's a big position now, and I want to hold this. And now this is an old position we got, and it came down. It's now at 50 cents, and it lost 37% of the value today. And this is what I said. You guys, it all depends on your entry price, especially that's how I'm setting this up. But these were the ones that went $500 to $8,000 yesterday. Now they still have a value. They're still worth a couple grand, but I bought these at 7 cents. So we're up just over 500. We're about like 600-700% on these. So I'm still holding those. They have a big one, but now that will get me into the Fed meeting. And then after the Fed meeting as well, if these ones go back up to like 9,000-10,000, if TLT bounces before the Fed meeting, I will consider trimming half of these and then holding the rest, but I plan on holding these for the most part. And then now there's the Mays. We got these yesterday, I believe is the 185s. Yeah, we stole these yesterday. We got these at 23 cents, and they went up, but you still see they still ended up higher today. They still were up over 50-60%. They were even up 80% at one point as everything was dropping. And this will tell you something, and you could see the April started to lose some value further out the money, but the Mays and Junes on a lot of contracts, they held their value for a reason because there's so much uncertainty, and that's what we're playing. So they're there, and now what I'm waiting for is if TLT starts going down, I'll lose on the March. We'll lose a little bit of profit on those Aprils. However, it's going to give me an opportunity to play some of these with more time on TLT and now establish that position. And people said, am I going to buy more TLT? My plan here is play out all these days coming into the Fed, but I'm not going to sell out any of these, and I'm not going to buy them till I could get them cheaper or around the same price I paid. And then same thing with the Junes. We bought these June 200s, still crazy out the money. They were still like up like 10-20%, but still not cheaper. We need them to come cheaper so we could either get a better play or we average down on them, and those are the TLTs, and that's how I'm moving. But that is the main play I'm going after here up until the Fed, and after the Fed, I think that is going to dictate a lot. Given the Fed funds rate and how all that stuff is going to play out, I believe that's the most important factor. So those are the main ones I'm going to be looking at. That's the main play I would say that I'm getting into. Please understand too, none of this is a recommendation. Not copy any of these trades. I'm showing you what I do. If you copy them, you will lose. Be cautious, do your own diligence. Opposite trader, you can't lose all the most financial responsibility. This whole financial advice, educational purpose only. Thank you. And be smart. Control the budget. So besides that, the other stocks I'm going to be looking at that my secondary honorable mention, it's going to be HD and McDonald's. And I really, really like these plays. And another one, I'm going to give you guys a secondary one. These are plays I was eyeing. I was looking at May USO puts. I kind of want to get them, but I don't really like the fact that it's a $9 stock, and you're going to need pretty much oil to come back down to $40 to be profitable on that play. And then EWI. This is Italy. I think they're going to get a travel ban. Their cases have been going crazy. They've kind of been like the second place hit hardest, I believe, in Europe, in a lot of cases coming from there. We're still anticipating the travel ban. We haven't heard it. Maybe we'll get it as the market stabilize a little bit. So we'll see, again, equal and opposite reactions in news. But I'm looking at these two as secondary plays. I like them, but they're not really too appealing until they get cheaper. You know, if you gave me these at a bargain, I'll take them. But right now, I'm cool holding with what I'm holding and watching those. Otherwise, on short-term momentum and volatility, I'm going to be eyeing Home Depot and McDonald's because this was a big bounce. The fact that those March 260s came back to life, I like that. So we're going to be holding those. Besides that, Zoom will be a good continuation tomorrow, probably. I hope so. It's pretty much moving within the expected range. It had a big drop, but we'll see how the market just reacts to that in general. Watching the Starbucks still again. You guys saw what happened with the May contracts, even those PGs, and then that regen. We had that 280, 285 ghetto spread. That thing's up 3,000% right now. So we have like 300 of 500 max gain. I believe that's March 20th it expires, so we'll see if they keep going up or not. But I brought these guys up yesterday. They met at the White House, so they could even be a drug play, so I'm going to watch them. UNH could be a short-term momentum play, but this was a monster bounce. These contracts already went up 1,000%, but this in healthcare might be a little interesting. Let's see if anything gets reversed with Biden or anything of that nature. And then Netflix, I'm still in those plays we grabbed yesterday. They went back up. Now they're down 20%. Watch Facebook. We had that one call for March 20th. That credit spread is doing good, but why I want to talk about that credit spread, because the Nvidias, we were up on those or slightly down, but those expired this week. So depending on where they're at tomorrow or even Friday morning, I'm going to decide tomorrow, but I'm thinking mainly on Friday is when I'm going to decide to really roll those overs if we need to. So again, when playing credit spreads, give it time, play it out till the time. If you're not getting assigned, you don't have anything to worry about. We are in the money, so that could happen. However, if that did happen, I would just go open another position with March. But I think I'm just going to roll over and do the same credit spread, maybe try to get one with a better probability to try to get the money back that we lose on it. And I do that for March 20th. And another strategy I was even thinking in general with everything, I kind of want to sell put spreads. This would actually be a good time because if we are going to get a positive week, or if things kind of chill out for a week or two before the Fed, this would be a good time to take advantage of all these high put premiums and sell put credit spreads. Yes, even if the market goes down, you run the risk, but with premiums so high, you actually are getting protected and it's slightly in your favor now. So watch that. Watch Uber and UAL. They went up. We're still holding that UALs from the other day. I believe the Ubers that we have on those Aprils are up, or the Mays. They're slightly up, but they've been all over the place. But Uber had a crazy run up today. Again, UAL was down in the gutter, hit a new 52-week low, then bounced with everything. But watch the travel in general and watch them to outpace and watch the back and forth. And finally, TLT. This is going to be the play of the month. I really like this. So unless I could really see crazy volatility and take something on the short term, I'm going to go after maybe those volatilities. And like I said, tech and everything if it lags, but I just want to build my position around here. I think we need to be looking ahead to the Fed, and that will be the most important thing. However, a lot of moves showed us today there is going to be short-term opportunities, so I don't want to miss those. However, I still want to control my budget and make sure I get everything. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watches. Make sure we see you there in the morning, baby. You have it in you. You've already learned it some way, somehow. Just expose yourself. Take it. Stand firm. Be smart. Control the budget. Set a plan now. Look ahead, baby. If you think you lost, you have not lost yet. If you think you won, you have not won yet. This is only the beginning. It's going to get crazy. So hopefully you have the patience and mental fortitude to ride it out. Just don't give up. Be nimble. Be ready to go. Get the armor helmet, baby. And be positive and respectful. And please make sure you wash your hands. The gold loves you, baby. I'll see you in the morning. Let's go.